So I'm going to go over the history of Bitcoin and so this is the Bitcoin price graph going back over 8 years. And for the first 4 years, Bitcoin was essentially worthless. No exchange existed. There was no established pricing data. No one knew how much a Bitcoin was worth for basically until Mt. Gox, which was the first major Bitcoin exchange. So from 2011, this was when we first started getting Bitcoin pricing data. So this was the launch of Mt. Gox, I believe. And Bitcoin actually existed several years before this. So Bitcoin was essentially worthless monopoly money until about 2013 when it hit about $1. And then by the beginning of 2014, Bitcoin was at $1,000, and then it crashed back down, and then continued to go. So Bitcoin as currency was essentially useless and had no established monetary value for 4 or 6 years. And Bitcoin, another thing to keep in mind is Bitcoin was not the first cryptocurrency. There was Hashcash, Cash, and there was, I think, 4 or 6 other coins that I remember before Bitcoin, and you can't even find them in Google anymore. It's like esoteric mailing lists. And so there was a question of why Bitcoin took off. And one of the reasons, personally, I think Bitcoin survived instead of dying like the other coins was that Bitcoin was successful at building up a user community, whereas previously you would have a coin, like very similar to someone forking Bitcoin and creating the coin barbecue coin. You would have a person and they would create a coin and they would give it to their friends, and it was used by like 4 or 6 people, but eventually they stopped using it and it just died. Bitcoin survived because it was giving people free money. So people would run this computer software in the early days of Bitcoin, and they would mine Bitcoin with their CPU, and they were essentially getting these tokens, and then they would pass the tokens around to each other. So I remember sitting in an IRC chat room, and someone couldn't compile Bitcoin on Debian because some library was updated, and I was sitting there like doing bug fixes, and someone sent me like 5,000 Bitcoin for fixing some stupid compilation bug. And so people were just handing Bitcoin back and forth to each other, and it was sort of like monopoly money. But it had since people were running this program and they were getting Bitcoin for running the program, they sort of stayed there, and new people would come into the community, and new people would run the program, and the old people would leave, and they'd get bored with Bitcoin after about 2 years. But at every stage, more and more people were coming in. So during the evolution of Bitcoin, I've seen maybe 6 or 8 or 12 generations, and every 6 months there's another group of people bigger than the existing group that floods in, and they're like, we're the Bitcoin people now, or we're the altcoin community now. And those people have no continuity with the previous generation or the people that were in cryptocurrencies 6 months ago. So anyways, this looks like a bubble. This Bitcoin price graph looks like a speculative bubble. But if we take the logarithm of that price graph, what we see is that Bitcoin has experienced constant exponential growth. So if Bitcoin is growing 1% per day in price, or 1% per day in terms of number of users in the Bitcoin community, then the logarithm of the price graph will be a straight line. And the slope of that line represents the growth rate, which is about 1 to 1.2% per day. And what we see is that this growth rate has been constant going back as far as we have data. Even when Bitcoin was at a penny, or when you could buy 1,000 Bitcoins for $1, the growth rate was exactly the same as when Bitcoin was at $1,000. And so this looks like a financial bubble, but the reality is you take the logarithm and you plot this trend line, and we see that the Bitcoin community is growing 1% per day, the price is growing 1% per day, and it's been doing that for at least 8 years now. And actually, in reality, 14 years, but we don't even have pricing data because there wasn't exchanges and no one was even tracking Bitcoin going back that far. And we do the regression line, and so when I worked at a hedge fund, and we were doing quantitative analysis, and we would look for these trends, and we would just say, okay, this trend's been going 6 years, and then it's increasing 1% per day, and then we'd buy it. So it's sort of like Google stock, and you know this stock is increasing at this rate, and it's been constant for 10 years, and it's likely to continue at that rate until the rate declines, and then we would sell that stock, and then we would go to the next trend. So this is why I actually entered Bitcoin, was I was tracking this data going back to almost 2011. And so you see the trend, you get in the trend early, and then you also ask why the trend is happening, and then you try to determine what the causal factors are, and when those factors change, then the trend stops. So the linear regression line is 1% per day daily growth. So this is the ratio of the Bitcoin price against this is the predicted price. This is the actual price. You take the actual price and you divide it by the predicted price in the linear regression line. And so this is a type of quantitative analysis we would do for, to look at a stock and see if something was like a pump and dump or what was going on with the market. And so what we see is that there's this 1% per day growth in user base or price or market cap. And occasionally people get greedy and they see their friend like bought Bitcoin at a penny and then it went to $10 and then they're buying like 15 condos and Lamborghinis and just going crazy, quitting their job, and they're like, oh my God, I need to get rich too. And so and then all of these people flood into the market with a lot of money all at once, and it drives the price up. And then the price, of course, collapses back down to the long-term growth. So there's events or sporadic influxes of capital which will drive the price up in sort of a little speculative financial bubble, and then the price collapses back down to the regression line. And so we see in this, about 2011, we had a bubble, a run-up, where Bitcoin went up about 10x over the fundamental value, and again in 2013, and we had a bubble in 2014 where it went up 20x the value, and then I haven't updated this graph in a few years, but you would see another bubble when Bitcoin hit 20,000, and so the public tends to rush in at the peak. So the public tends to, when Bitcoin's at $20,000, they go in their credit card and they say, I got to buy $60,000 worth of Bitcoin. It just went up 10x. And then at the top, they buy, and then it crashes, and they sell all the Bitcoin they own, and say, "Oh my God, I almost lost everything." And then so you see this pattern of the public buying at the top and then selling at the bottom, like over and over and over and over again, which is sort of funny. So the total Bitcoin market cap right now is 150 billion US dollars. The total market cap of all crypto assets is 300 billion. For the first decade, Bitcoin was the only crypto coin. It was the only asset in the market. And then in the last 2 years, Bitcoin has declined to less than 50% of the total market capitalization of the asset class. And over time, I would expect that Bitcoin's dominance, or the percentage of market cap represented by Bitcoin, will rapidly decline. So for the first decade, it was just Bitcoin. And now we have, in the last 2 years, we saw the proliferation of thousands of coins. Bitcoin, Ethereum, Ripple, NEM, Ethereum, Litecoin, Dash. And now we're seeing like over 1,000 ICOs per day. So we're going from one crypto asset to 100 to 1,000, and eventually to millions of crypto assets. And as an example, the state of Delaware has legalized companies putting their stock on blockchain. So if you're a mom and pop bakery and you incorporate in Delaware, the government says you can put your shares on blockchain. And then if you have 100,000 or you have 10 million companies, like little mom and pop bakeries or a coffee shop or a lumber yard, putting the equity in their company on blockchain, that blockchain now becomes a digitally tradable, interoperable asset that can now be traded by machines. So the second you incorporate and you put these shares on blockchain, you're the same as Ethereum, or you're the same as Bitcoin, or the same as Litecoin. And so you're literally going to have several tens or hundreds of millions of blockchain assets that are sort of coming onto the market over the next decade. So this blockchain is really the new financial system. So in here we see Bitcoin was 100% of crypto assets until about January 2017. and then it rapidly declined to 50% of crypto assets, and over time, I think it'll decline to 20%. But we had a recent speculative run-up where the Bitcoin dominance went up to 60%, and then it crashed back down to 40%, but it's basically going to follow this trend line. This is a, yeah. So we see the Bitcoin dominance as a percentage of crypto assets declined, but Bitcoin market cap went up. The public rushed in, and the percentage inverted, and anyways. So people are asking how large of an asset class can cryptocurrency become, and what numerical value we expect the market cap to reach. So Bitcoin's at 150 billion. All the crypto coins together are about twice that, and all of the government currencies on Earth are worth about 5 trillion. All the gold on Earth is worth about 7 trillion, and all the silver on Earth is worth about 15 billion. So Bitcoin's already 10x the value of the silver on Earth, and over time we expect that the cryptocurrency market cap will approach the value of all fiat currency or the value of all gold. So we're expecting the crypto market cap, the market cap of all the crypto assets to reach at least $5 to $10 trillion, which means that the market has about 20, 30x from here. Yeah, so Bitcoin's only reached 1% of the total value of the gold on Earth. Let's see. Yeah, so Bitcoin was for the first 8 or 10 years, no one was talking about anything but Bitcoin. It was the only cryptocurrency. It was the only asset in the class. And it was the first cryptocurrency, and that's all anyone talked about. And then in the last 2 years, we saw the entry of these thousands of coins. But people forget that Bitcoin is not the final currency. It is actually just a prototype. It was the first blockchain application, but it is actually also the oldest blockchain application, the blockchain application with the most problems. And we're seeing the public rushing into Bitcoin just as Bitcoin is hitting the fatal problems that are going to eventually cause its growth peak to plateau and then stop. And the other issue is that Bitcoin is such a large asset right now. The developers are very conservative, so we don't see the Bitcoin developers adopting many of the innovations that are necessary to achieve mass adoption. And we're seeing the public rushing into Bitcoin just as Bitcoin is becoming, just as every other coin has better scalability, faster speed, it's smart contract platform. We're seeing another issue is that the Bitcoin community is unwilling or unable to solve its fundamental problems. And one example of this is that the Bitcoin network is only able to do 6 transactions per second. And developers, dozens of developers have showed up, and they say, we can solve it this way, and we can solve it this way, and we can solve it this way. And then when the solution is developed, the miners say, no, 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 we don't want that, because the miners are actually making money off the congestion in the Bitcoin network. So we actually caught mining pools creating fake transactions to flood the network, and then people were fighting against fake transactions injected by the mining pools, and they were eventually paying $50 per transaction. And all of this money was getting shoved into the mining pool's pocket. And you say, oh, the transaction fees are too high, we can fix that. And you do a solution, and the mining pools will oppose any solution. They'll say, we're going to fork the coin, we're going to do this, we're going to do that. And since it's making them money, they don't actually want the problem solved. So we have sort of an oligarchy of miners and existing companies, and they're making money on a lot of these problems. And so they're actually keeping in place the problems that are slowing down Bitcoin adoption. And because those problems are unresolved, the Bitcoin growth peak is going to plateau, and then you're going to have an inversion. And so just about the time when Bitcoin was launched, immediately after Bitcoin was launched, actually around, I think, we started this project called Skycoin, and it's very complicated. It's a very old project, and we had 3 different groups that sort of merged that were working on different aspects of the Bitcoin ecosystem, and we were looking at where Bitcoin would be in 2 years, 4 years, 6 years. So the public wasn't using Bitcoin. It hadn't achieved mass adoption, but it was clear that there were these technical problems that were going to impair that Bitcoin would eventually hit. So we started working on, for instance, the consensus algorithm. So we said if you wanted to build a global digital currency, you would need to be faster than the competitors. It would need to be faster than PayPal. It would need to be faster than the credit cards. So I can go into a coffee shop and I could buy a coffee with a Visa card in 2 seconds. And my payment would go through in 2 seconds. If I want to buy a coffee with Bitcoin, I have to wait an hour. It takes 20 minutes, 15 minutes, 2 hours, or even days sometimes for the transaction to go through. And we said the transaction fees have to be basically free. We want 0 transaction fees. So people at the start, when I started working with Bitcoin and actually using it for payments, I was using it because a Bitcoin transaction was a few pennies. And the banks were telling me $20, $40, $60 to do an international wire transfer. So I said, why am I going to use this bank that's going to charge me $60 to send money overseas when I can just send the guy Bitcoin for a penny? And so people started using Bitcoin because it was convenient. But then as the network became congested and they hit the scaling limitations, people ended up paying $50 for a Bitcoin transaction. So people said, why am I going to use Bitcoin and pay $50 per transaction if the bank will do it for 20? So then you had, so we had to figure out how do we get the transactions to be instant? How do we eliminate the transaction fees? And then eventually we had a mining. There was a point in Bitcoin where gigahash.io had 60% of the hashing power, maybe even 70%, and they were hiding the hashing power in other mining pools so that people didn't panic. So Satoshi imagined this decentralized cryptocurrency where hundreds of thousands of people across the earth would be running the network. And what ended up actually happening was 1 to 3 mining pools end up owning the network. So Bitcoin is no longer decentralized and has essentially failed at doing what it was intended to do. So we saw this from basically the 3rd year of Bitcoin after Mt. Gox, that the network was going to be consolidated and that it wasn't decentralized. And then we spent 4 years doing academic research on how to develop a new database consensus algorithm to re-decentralize Bitcoin. And we also worked on the scripting language, CX, and we created a new immutable object thing, CXO. We tried to improve Bitcoin's usability because it was basically a train wreck. And Bitcoin usability is still not very high. We tried to figure out solutions for storing large amounts of blocks. So if you have if you're using a blockchain as a decentralized database and you're producing thousands of megabits per hour of block data, you might not want to store the whole history from the beginning of time because once the blockchain gets over 1 terabyte, no one will have a hard disk big enough to store it. So you start having to prune the data, or you start having to do checkpoints, or you start having to have nodes selectively storing date ranges. So every node, so you're going to need to have a thin client like on a cell phone. You don't want to download 100 gigabytes. You just want to do a transaction and check your balance. And you have a company and they only want the current balances and maybe the history for the last month. And then you have a few nodes that might want to store the whole transaction history, or you have a node that only needs, this node has this transaction history for this year, and this node has transaction history for this year, and this node has transaction history for this year, and so on. And then, so this question about scaling the database, because what blockchain basically is, many people don't understand what blockchain is, but it's a database. And we eventually want to get the blockchain technology to the point that it can be used by corporations the same way that an SQL database is used by a corporation. Companies don't brag, I'm using an SQL database. Today they say, I'm using blockchain or I'm using this, but they don't really care what they're actually using or what the underlying technology is. They just say, does this meet my business need? How do I make money on this? Is this easy to use? Will this solve our problem? And so as blockchain matures, it'll sort of disappear into the background, just like database. No one talks about database software anymore. And so as blockchain becomes more mature, no one's going to show up to blockchain conferences. It'll just be, And then we wanted to create applications that use blockchains. So if you have a blockchain but no applications, why is anyone going to use it? What is the purpose of blockchain? And so this is the first coin on our platform, which was Skycoin, which is the flagship coin. And this launched, so anyways, this is the linear regression graph for Skycoin. And you see that you do the logarithm of the price, you do the graph, you look at the growth rate, and you see like the user base is growing 1% per day going back as far as we have data. And the price, if the user base doubles, the price doubles, yeah, and Bitcoin, so I don't even have time. Let's see. So some of the problems with Bitcoin, transactions take hours. We need to really be a global currency and be useful for payments. It has to be seconds. Proof of work and proof of stake are unable to provide the required transaction times. It's just mathematically impossible. So we developed a new database consensus algorithm called Obelisk, and we're able to achieve transaction times as low as like 1 second or half a second for a global network. Bitcoin only can do 6 transactions a second. Ethereum can only do 30. We can do 300, but we have an infinite number of blockchains in parallel. So we have no transaction limit. The Ethereum only has 30 transactions per second, meaning that there's less than 30 people on Earth right now using Ethereum at the same time. If you look at Facebook, they have 100 million people on Facebook's website at the same time. And there's only less than 30 people on Earth are using Ethereum, and we know that because if 30 people on Earth were buying and selling cats on Ethereum at the same time, the network collapses and it's congested for 2 days, and you have to wait a day for your transaction to get through. Yes, and the other thing is, like Delaware is allowing companies to put their equity on blockchain. So every single company is going to have a separate blockchain. They're going to have their stock on the blockchain. The people are going to be buying and selling the company equity. Instead of using a lawyer at a law firm to figure out who owns what, they're just going to put the data on the blockchain, and it's going to be automated by a machine. So like things like legal rights, IP, property ownership, paying traffic tickets, a lot of the administrative back-end functions that are currently done by lawyers or law firms or databases are going to be moved onto blockchain, and they're going to be replaced by an automated system. And so we're looking at using blockchain as a database and moving from there being one blockchain to having hundreds of millions of different blockchains that are each doing, one company might have 10,000 blockchains. They might have a blockchain for payroll. They might have a blockchain for their ERP system. They might have a blockchain for their physical inventory and warehousing. And the problem right now is these companies don't want to pay $300,000 to run a proof of work system. It just doesn't make sense for them. So when we designed our consensus algorithm, the objective was just to make all the proof of work and proof of stake coins obsolete, just irrelevant, and allow people to run their own blockchains for pennies a month instead of paying hundreds of thousands of dollars a month. And this is really the precursor to seeing government adoption of blockchain and corporate adoption of blockchain. And until this problem is solved, you're not going to see that. And so this is some of our white papers. They're peer-reviewed academic research published in IEEE computer science journals. The author of this paper is Chen. He was the first developer of Ethereum. He was the first developer that Vitalik hired he wrote basically PyEthereum. And anyway, there's a very funny story about this. The professor puts his name on the white paper for all of his students so he can show that he has more publications to get more grant money, and it makes him look good. And so he put his name on this paper. And then he started reading about Chinese government cracking down on blockchain, and China banned Bitcoin, and he starts panicking and thinks he's going to get arrested or something, and he tries to like disappear the paper, which you can't do. But anyways, so this is in the upper right-hand corner. These are various consensus algorithms, and we see some of them take 40 rounds to converge, which means they don't converge after 40 rounds. And then the Skycoin consensus algorithm is in red. And so the average convergence is in 8 rounds, or 8 iterations to global convergence. And we achieve convergence in approximately 8 rounds. And for a global consensus network, each round is about 200 milliseconds. So globally, we're able to achieve a 1.6 seconds per block, basically. And there's no 51% attack. We have no mining costs. We have no miners. And anyway, I don't have time to. And yeah. So today it's not enough to just build the best coin, have the best blockchain, have the fastest transaction rate, have the best consensus algorithm, or even have the best scripting language. You need to have a reason for people to use the coin. If you launched Bitcoin today, or you had something 10 times better than Bitcoin, no one will care. They're like, what does it do? How does it make me money? How can I use this for my company? You have to justify the usage of the coin. And so we built the base layer, the blockchain, the consensus, and we built the platform, and then we're also building applications. So we have Platform Fiber, which is our platform with an infinite number of parallel blockchains. So each company can have their own blockchain or even multiple blockchains. We have a hardware platform for the blockchain applications called SkyMiner. We have sort of like inter-process communication, Sky messaging, decentralized social media. We started prototyping video games on blockchain this year. We have privacy coin features like CoinJoin, new consensus algorithm, Obelisk, and then we're prototyping like distributed utility. Anyway, there's a lot of different, CX is our programming language, and then we have some other things that are just like users, some applications that are just useful to a certain subset of users. And then we're doing other projects. We think that in the next year or 2 years that we're going to see a lot of attention for video games, gambling, video games on blockchain, and we're getting approached by a lot of video game companies, and we're testing like non-fungible digital assets. So we have 30 coins doing ICOs on the Skyledger platform right now. And one of them is by this Goldman Sachs guy, and he has a yacht coin, and he bought 20 yachts for like 10 million each, and he's going to do yacht timeshares. So if you have the right to use the yacht for 1 month in September or 1 week in September, that's different than being able to use a yacht timeshare in October or in February. So we're starting to move into non-fungible digital assets and like gift cards and companies issuing coupons on blockchain and different types of assets that are not fungible. So if you have 1 Bitcoin, it's the same as any other Bitcoin. But if you have a timeshare in September, it's different than a timeshare in February, and it's different prices. So we're doing this application called Kitty Cash, which is just a test of non-fungible digital assets. This is our blockchain hardware platform. This is actually a sort of a mini supercomputing cluster or a personal cloud, like having Amazon EC2 in your house. So we have hardware units, and you're able to deploy So this is 8 computers. And you're able to say, run blockchain application 1 on node 1, run blockchain application 2 on node 2, run blockchain application 3 on node 3, and you're able to, in a HTTP interface, to control hundreds, potentially tens of thousands of computing nodes and to deploy applications on them. And so if you have a company that is running 300 blockchains, they just buy these units, they plug them in, and then they're instantly able to deploy applications against them. So it's for our corporate partners. And then we're doing something, one of our flagship applications is called Skywire, which is a sort of an experiment to see if we can build a decentralized telecom company. So we have an application where people are forwarding traffic between each other. And if you buy your internet infrastructure and you own it, and if you're forwarding packets, and if you forward packets for your neighbor, you're being paid coins. And if you provide resources to the network, you get paid coins. If you consume resources, you pay coins. So this is sort of a peer-to-peer sharing economy. And then we're also doing the same thing with power meters. So we have, I think, like already 4 companies, solarbankers.com, Apollo Energy, and then a Portland grid company, and then who are doing decentralized power grids on blockchain, and we're doing pilot projects with them, and we're going to be releasing a blockchain enabled smart power meter towards the end of the year. So we're doing all these pilot. We have these companies, we have the technology, the base built, and then we build the applications, and now we're having the corporate partners and companies approaching us, and we're sort of building out applications for them. I don't have enough time to go through. Yeah. We have 1 question? 40 seconds. Not yet. Second one. second question, or? Where's the? I can't see.
Does anybody?
Yeah, so the miners are sold out for over a year. We're only producing 300 per month, and the waiting list right now is over 2,000 people. So we have to go build a bigger factory to manufacture them. And the miners, as soon as we ship them, they're obsolete because that was the first generation miner. And the second generation, we have custom PCB boards, like new power distribution board. We have a custom open source WRT router. And we're going to try to scale the production capacity to 1,000 units per month. But people at the current production rate are going to have to wait over a year to get their miner. So we're trying to get a factory space and scale production. And we have a lot. We have, I think, 6 or 8 hardware projects also on top of the miner that are going to be announced. Yeah. And we're going to be announcing the testnet launch for the Skywire on the 10th in Shanghai. So we have an event for that.
Any more questions for Synth?
Why are you based in China?
We're global. We have people in the United States, Europe. 1/3 of our developers are Russian. We have people in Hangzhou, Shanghai, I think Shenzhen now. We're opening up an office in Hangzhou. We have 2 or 3 offices in Shanghai. We have an office in Kiev. We're opening up a London office, a Malta office, and I think we are getting a marketing office in Charleston. So we have over 150 people. It might be up to 300 now. And we're just like office. I can't even keep track of it, and I can't remember the people's names. So I live in China, but the team is just all over the place.
All right. Okay. Thank you very much, Synth.